Hello everyone. So we have seen some really good movement yesterday on the euro dollar. Um, Based on the high time frame chart, we were bearish, and th- if I quickly explain you why I was bearish, it's mainly to do with um, sorry, ignore all this clutter, but it'll all make sense when we go on the lower time frame charts. So this was one of the sell side liquidities which was grabbed the day before, and then there was a small CB there which I thought it will be trading through it, and then if we were meant to be bullish, I was expecting it to be it to break, and then well, it supported it, the idea of bearishness, and that's why I expected it to run through this liquidity which is still intact. So we're still bearish on it for today. On a weekly chart as well, we this week here the consequent encroachment was traded similar to, like, based on the daily chart. I see bearishness in this as well. These equal lows are also quite interesting, and a matter of fact that we have broken down through the weekly bullish fair value gap, or the BC. This could act as bearish when we reach there. It's quite far away, but the bearishness on the um, weekly chart, if you look at it from just by the weekly chart, the important thing to notice is it has not done its it is still in the discount area for the short. So if you want big moves, potentially, like if you're going to trade the high time frame, 50% of this range should be a really good area. And I think like this, currently, if you just go by the 50%, like from the body to body, I think it's somewhere there. So it's somewhere around that area, which makes up the liquidity above this high. So we can expect that on a very high time, like longer time period. But on a daily, on a day trading point of view, we are bearish. Bearish, expecting prices to run through this low, and then potentially closing out this remaining BC, like redelivery, not as we say, we don't, when it goes through it, we don't call it as rebalance, it is redelivery, and then when it leaves the the gap, then it's called rebalanced. This is another interesting point. So I'm definitely bearish on this. It's going on the 15-minute. Yesterday this was the price action what I traded. I did see that it was basically trying to reach into something, but the most important point that I noticed was this 15-minute CB. So it hit it and then it reversed. So I was not in this trade, but I think doesn't matter like where I entered, where I exited, I made money, that's it. But the important point is this rejected here on the 15-minute, and then this is one of the triggers that I thought, yes, something's happening. And then when it dropped straight down, this was the 15-minute 50% range of this particular range. This is my concept, unbalanced price range. Yes, it is somewhat similar to what ICT does, but the way I use it, it's quite unique. The reason why I use it like that, it's completely based on what I understand. It is mainly I try to figure out whether the price is balanced or not. You'll make, like, for example, this week here it has traded both sides. So from this point onwards, it is unbalanced. So this point to this point is what I would consider as an unbalance. There are multiple ways of doing it, but I feel based on my back testing and things, this gives you a lot of precision. I wouldn't claim anything if ICT. I think I have heard ICT talking about it, but I don't think he has explained it quite in detail, and I don't think it matters. It's not an entry technique or anything. It's just a way to understand whether price is in the premium or the discount zone, and then it gives you a fair enough idea about like whether it's showing what you want to see. Basically, in this case, I was bearish and I saw this and then it rejected, and this is another confirmation that I got. So going on the 1 minute, if we look at the price action for yesterday again, just to bring everyone to the so there, look, so from that point to that point, that was a 50%. It hit to the pip and then dropped. So I've made another video probably on this, but yeah. So we went into the 15-minute CB. That was Judas swing. It happened around that's 315 is -7 is what, 12 is no, sorry, not 12. 10 o'clock New York time, and then so 9:30 to 10 probably, that was sorry, 9:50 to 10 macro. So I can assume that, but it's in the zone, it's in the kill zone. I'm not someone who goes like specifically drawing like lines in exact time zone, because I want to see, if I see it somewhere roughly around that time, I just take it, and I also trade the non-ICT timings as well, because I see what I see. So when it dropped and it supported that idea of the premium being basically this unbalanced range being supported, and then it dropped again. This small CB supported price later, so basically it told a lot of things here. However, when I was looking at this area and I saw that, my eyes went to the lows here. It's quite clean. That's the buy side, sorry, sell side liquidity. And then you have, if I look at the overall, like from a 15-minute point of view, so we had the, I think I might have deleted it. It's definitely another thing I was targeting. Second, yeah, it was the high of this candle. That's the sorry, let me just draw it. I don't know how I deleted it. So it's 108, 352. It's the daily busy low, that high there. So that was another thing I was looking for on that day. So there, hits it, and then that's when it did the 50%. No, doesn't matter. Let me go back to the day. Okay. Alright, so when I was here, when we were here, I was targeting that. Right, so because it gave like a certain move, I was like, okay, it's already done the target, so I might look for the next one. And then I had that as my target because it's the low on the daily. So when it retraced and then showed me that there is still bearishness. And if you look at the order flow, every up candle is supporting the bearish idea. Like example, like for example, if you take these two, these combined they become an order block. So once this is breached, the consequent encroachment of this was never like breached. So that is the giveaway that yes, it's bearish. And then later we had for example maybe that one as well, like it did act as a thing. And then a reversal here, this was to entice traders into it, and they use this basically the macro or whatever you call it, IPDA or market makers, whatever. This move is designed to rebalance the initial drop and then take out the liquidity. So some traders put their stops here, stops there, then the rebalancing of this. So you can see this low to high, this is your CB, and this was the CB first. It was supported here and then taken out, and then once this was breached later on, that became the bearish idea. So what told me that this was going to happen was I saw that the bullish this bearish the bearish order block. These terms are really like sorry if I'm confusing you guys. This bullish bearish order block, I was expecting some rejection of this, so I did get that. And then once we breached this low, I expected this to be tapped, the low of this, which was tapped here, and then we rejected. So this confirmed the bearishness. So again, I was expecting this to be taken out, to be honest, but it was too much to ask, you know. So I took a trade here. I think it was somewhere around 1 to 4 or something like that, and I took some partials, and then my stop was it. Later, see how this BC low is being supported here. That's really good, you know. Then they created this area here, because this low breached that is not considered as liquidity for the time being, like because it's now seeing this whilst it was happening live. So once I got a retracement back into the CB, it exactly traded the 50% of this gap, and then it hits the low of the gap, and then it dropped. So again, I saw bearish idea here. This PD is nothing but premium discount of this particular range. So I was expecting, if this is bullish, if this is going to go higher, to take out like maybe these highs or these highs, which was a bit not on the cards until and unless this sell side was taken. If you look at my I think I've made another video, but I'm not sure, but yeah, but doesn't matter. There was this minor sell side liquidity, and then this. I was expecting it to go through this, keep these lows intact, go through this, make equal lows, and then shoot higher, and then later on treat that as liquidity. But the trade idea panned out really well. I would say I was almost right, but yeah, you can't be 100% right. So this gave away another thing, like bull flag, clear lows. People who trade this, they buy here, they keep their stops here, very obvious. And then a bit more strong traders, they keep their stops here. So I saw that, and then I saw the drop, and then later I was like, yes, it is doing what it's supposed to do. And these two gaps here, let me just move to the left, far left. So these two gaps combined one, it's a breakaway gap because it's breaking away from this consolidation. So that breakaway gap, and then we had a normal gap here. So as soon as we broke down, I was expecting the order blocks to support, which they did. So this is one order block here which supported the idea. So when it formed, the low was breached, and then they took orders from here and then they dropped. So this was supporting the idea of bearishness again. So that is why I went short here. So as soon as I got this fair value gap, as soon as this entered in here, and then I got some rejection, I entered at this in this candle. Where was my stop? My stop was above this order block, just here, because I took. So basically, sorry, no, not above this order block. So it was above the mean threshold of this, because this is not an order block. This is an order block. This was dropped, took that into the middle of the range, then dropped. So this is just a retracement into this order block. So you can't treat that as an order block. This high would have been taken easily and then dropped. So that's why my stop was somewhere around here. So I entered here, stop was here, target was, actually my target was that, but my first partial was actually in this BC. I expected it to drop in here and then do what it did. So it didn't. So what I did was, when it went here, when it started to go here, and it left this high like that, this is where I understood, like, okay, they are, when they go close to some low, they tend to build liquidity just near to the low that is just been missed. That is obvious. Like, I think if you guys have not noticed it, it is really obvious. So this coming close to this, taking out this, people who have kept their stops here are very confident, or confident in the sense they are like, oh, they feel like, okay, yes, I think it is going to go up now. Whoever has bought here, put the stops here, and then they see this move, they see, oh, okay, yeah, we have something move here, they keep adding here, and then they probably move the stops here or here. So obvious target will be this, and then this will be taken out. It has to be taken out. It's like, it's an obvious thing. So anyways, as soon as it went up, I was expecting it to touch this, but it didn't, and then it formed a small order block here. It rejected, and then I expected this to be supported. So when I was seeing this, my stop came down here. Then I entered another position here. Then I ran through to the sell side liquidity. As soon as I saw some, this order block form here, the bullish order block, you can see this is a big order block here. They have been continuously down, and then they breached that, and then they started supporting the order block. So this was a dangerous thing for me. I did not expect that to happen. So when it went up like that and it hit that, started dropping, and then started supporting this, I was like, oh my god, this is gonna go up. That's what I said in my mind, and then I closed my positions somewhere here. I did take some partial here, and then I closed all the positions here. No matter what, like, saving the capital is the key. That's what I feel. So that was the quick recap on what I did yesterday. I hope that is insightful.